Stocks, bonds, mutual funds. We're going for passive income today. Welcome back to the Banking Bros podcast, and we're going to break down the barriers between you and building serious wealth.
That's right. I am Joe Nadeau, and as always, I'm here with my brother, the other half of the Banking Bros,
Jay Do.
Yep, and we are, in this episode, going to try to arm you with the knowledge to take control of your financial future.
Today, we're tackling the topic that is music to everyone's ears, passive income.
Yep.
Passive income. We're peeling back the layers on multiple different strategies and ideas that allow money to work for you, even if you're sleeping. Because Warren Buffett said, if you can't get money to work for you, then you work until you die.
Mm-hmm. So today's all about that money. So this is the classic allure of dividend stocks. Those have possibly gotten a hit in the last couple of days here. We've got tangible returns like real estate we'll dive into in this episode. We can talk about the exciting potential of digital products and even peer-to-peer financing, which is something that we talk about from time to time on this show. We're going to explore the avenues to build those consistent and diverse hands-off income streams.
Yeah, so if you're ready for some pros, some cons, some ideas that you maybe haven't implemented yet, that's what we're going to get into. Some actionable steps to hit your financial goals, whatever they may be, wherever you are, because it's all about code cracking passive cash flow today.
There we go. Let's get into it.
Now, ladies and gents, remember that if you are following us on our podcast platforms, we welcome you to subscribe and share this information with someone else who is working too hard in the active income world, and they need more passive income ideas to partner up with you. So if you find somebody like that, share this episode with them. Here at the Cash Compound, we're breaking down code cracking cash flow, and the Banking Bros podcast is where we, the hosts, walk and talk you through that wealth building. Also, find us on YT, IG, FB, and TT, and LinkedIn. All right, Jonah, let's get into the first passive.
It's fine. Let's get into it.
Oh, yeah, that one too.
Yeah, they changed I don't know what it would have been, TW. I don't know what
T-Dub?
But they changed it on us.
Twitter,
anyway,
TT.
Before we jump into it, I think we should take a quick second just to make sure that everyone listening understands what we mean by passive income. I think that if you're in the world of an employee mentality, that's where you are, that's where you work, that this idea is not something that you hear every day. What you hear is where you see yourself in the company in 5 years and whatnot, right? That's what you hear every day. And so this idea of passive income, let's be super, super clear about what we mean there. So my definition of passive income, Jeremiah might have a little bit of a different one, but my definition of passive income is income, money that's going to come into you or your family without you having to actively work for it. So the example of this, now this is not a great example, it's just a few cents here, right? But the idea here is that if you put $1 million into a bank account, a regular bank account at your local bank that's earning some interest, then once a month you're going to get an interest paid to you. And this is money now that your money has made. Now, the problem with that example and scenario is that the bank doesn't pay enough interest for it to be worthwhile. Or you have to have significant amounts of money and funds inside of that particular example in order to make an accomplishment. So it wouldn't be like $1 million. It would be like
well, I'm pulling up my banking app right now.
All right,
because I got some passive
got a few cents
income correct the other day, and I was like, what is this exactly? Oh, my checking account.
Most everybody realizes that at the conventional bank, it really just is a few cents. But if you can find the APY or whatever they're going to give you over there, that might be helpful.
Yeah, so it was 3 cents.
3 cents.
3 cents in my regular checking account where I swipe my debit card. I was like, oh, okay.
It's only happened to me one time, maybe back when I was 21 or 22, that I received enough interest earnings from a bank account that I received a 1099 from that bank account at the end of the year. I think it was a Wells Fargo account. And it was new to me because I was like, why in the world would Wells Fargo send me a 1099? I didn't work for them. And then, surprise, it was interest actually earned. So it might not have been a 1099. I think they call it something, maybe it's a 1099 INT or something, but I've only gotten one time from an account. Yep.
Okay, so passive income, in my definition, this is what I've been using recently. As you know, we give coaching sessions to people, one-on-one all the time, one-on-two. Yesterday, someone in our local neighborhood came to the office. They've been working with us for cash flow strategies for their family, the Save and Spend system, for 4 years. And so both of them came through. But I've started to use this terminology, that income is what you work for and money is what you spend. So sometimes I think that helps people in this idea of maybe passive income, is because income is what I'm going to work for. And of course, passive income is the broader term. We all agree that that's the universal way to talk about it. But money is what I can actually use, because a lot of people have money locked up places. And so it's like, well, if it's locked up, then it's not even in the category if you can't use it.
Sure.
And when we're talking about the 3-cup setup, which I have here on the table, if you're watching us, I say income, dollars that we make, we worked for, typically go into the red cup, premium. And then what it buys for us is money. I use a different word. And it buys money from the insurance company. And we spend money when we take cash value loans. So sometimes I'm utilizing those terminologies. I think it helps people a little bit.
Yeah.
And so passive income, these are dollars that you don't have to go out and get actively. So if you got a vending machine and you don't stock it, then we're going to call that passive as well. And that may help you. The other word I like a lot is residual, passive residual income. Sometimes there's passive income, and sometimes passive residual is different, because residual means it will come again next month or next year.
Sure.
Yeah. Let's get into it. Number 1, we've got dividend stocks.
Yeah, so this is the first type of passive income idea that we are going to dive into and give you guys today at home. So first off, we got to talk about what in the world a dividend stock is, and then let's talk about just a few maybe considerations, and if people are interested in this, how they can go about getting started even if they want to. So dividend stock, this is when you invest money and dividend-paying stocks, which are going to enable you to receive the regular payouts from company profits. Mm-hmm. So we talk about this in the infinite banking concept and whole life insurance, dividend-paying companies a lot. And so the people that are familiar with dividend stocks should pick up on exactly what that means. But if you're not, let's help you. So you've got this idea of dividend-paying stocks, and then I guess let me break it down. I was trying to put it into the same kind of terminology as our whole life insurance, but what you've got is
you become a shareholder of the
mutually owned,
yeah,
or stock owned. That's what I wanted.
Okay, I see what you're
mutually owned or stock owned, right? So, generally speaking, if something is mutually owned, then the people or the buyers or the owners of the products, whatever those products are the owners then of the company also, mutually owned. And so what happens is, as that entity, that company makes money, does well, they provide all of the benefits back to the policy holders, to the mutual owners, which a lot of times are us, right? And so with dividend stocks, it's very, very similar to that when we talk about mutually owned life insurance companies all the time. But in dividend stocks, of course, once you buy that dividend paying stock, now you'll get the dividend, the regular payout from the company's profits. So the key here is you've got to research these companies that have like a history of consistent dividend payments, mm-hmm, and companies that aren't going to go out of business.
There's plenty of them,
yeah,
out there. You can get these, I think some of them pay regularly, like quarterly. Some of them pay annually. And there are a lot of people who enjoy to invest. That's
yep,
what you're doing in this instance. You're participating in the market, and you're assuming that this company will not go out of business. You're assuming that they will sell products and they will have profit share. They will have owner distributions. They will have dividends that pay out to you.
Yep. Yep. So the easiest way to go about this is probably to open a brokerage account and search for those dividend stock options. Again, a lot of people like to do this self-sufficiently, self-start this whole, you can do it on your phone. There's an app for that idea here. And so a lot of people use some of the popular apps. I think the most popular one right now for getting to the market is Robinhood. You heard that one?
I've got it.
Yep. And so a lot of people try that, but here's the problem. You don't have any expertise. You don't have any coaching. You don't have any help on the Robinhood app. You've got to know what you're looking for in order to do that. And so I don't generally vote for that in a lot of different categories. I'm definitely going to say you got to go read a book. You got to go watch a YouTube video. You got to go talk to a person who knows what they're doing before you jump in, because trying to do it on your own makes it a lot tougher. You don't get to leverage into anyone's expertise. You don't get to say that person does not get to speak into you and say, I already tried that and it doesn't work and here's why. And then you get to learn from their mistakes. You have to go do it all yourself and figure out all the mistakes. So it's not my preferred method of jumping into dividend stocks. I'm going to go talk to somebody. Go sit down in somebody's office, open that brokerage account, and tell them what you're trying to accomplish so they can help you.
There you go. Number 2, real estate investments. This one is very popular, and we have all dabbled in this one in a little bit because we have to live somewhere. Okay, so the overwhelming definition, with real estate, is that real estate is a brick and mortar, sticks and bricks asset that appreciates over time.
Yep.
Okay, so why that's important to passive income is because there is money built into and equity built into, and people have to keep paying to live places.
That's right.
So there is abilities to get passive income being in real estate. Now, when we break that down from a very 30,000-foot view and this overview and overarching definition I just gave right there, we have to realize there are 1 million ways to participate in that.
That is
1 million ways.
And there's also a lot of different things that can happen being a participant that could cause some of the income to dip or spike. And a lot of people don't realize that either. And that's very important.
I think most people probably look at real estate as a ownership deal and passive income being rentals. Probably majority of people who are not involved in it. If you are involved in it, like we have been, that you realize there's 1,000 different ways, 1 million different ways to be involved. But having passive income because somebody else has to pay to live somewhere, and you might own or control property or the note, is probably, or maybe you have a basement and your kid lives in it, something like that. You're able to get passive income. Now, one thing, I think we should dive into story time right now, because I want you to tell the people a little bit about what you went through in your passive income years of trying to have a rental. Because I think you had some education in there. How passive was it?
Yeah, I mean, a lot of people were going to put real estate investments in the passive income strategy. And there's a big move and push right now that if you watch anybody on the internet who's doing real estate and doing it well, whether you're following them on the social media platforms or watching them on YouTube, they're going to let you know that real estate is not passive. Real estate is super, super active. I totally agree with that. Even if you've got all of your scaffolding, right? Your foundation in place, meaning that you have property managers, you have people that are going to go out and fix. So you've got a maintenance team. You've got maybe you're doing short-term rentals. You've got a turnover team that's going to come in and clean. Right? It's still active. Still active. You still got to be such a participant in what's happening. And so this idea that real estate is passive can be true, but I don't think it's as simple as, rentals are passive. Rentals are not passive. They're just not. I've heard from a couple different people, the more that you get, the more passive it becomes, because you get a little better and you have those teams in place. But I've heard from lots of people why you've got less than like 5 or 6 super active. And so I can definitely speak to that. It's been really, really active. which is not what I expected getting into the real estate investment category. I was looking for something more passive, and it's been really, really active.
Okay, so there's several ways that I've been involved in real estate that have been passive, and I love to be involved in real estate. So what I've learned is, okay, real estate is great. It pays. Someone has to pay to live there. It appreciates in value. If something goes wrong, I might inherit property, something that's actual real estate, so I can sell it or flip it or move on to something else. Also, I want it to be passive. So it's interesting because when we got involved in a rental in our hometown here, Greenville, South Carolina, I chose to be very passive in our deal. Part of it was because I was very aware this is about to be active. And apparently you didn't catch up on that for about 2 years.
Didn't know.
Yeah. So I was like, I'm not going to do anything. I said from day one, I will not be doing drywall. I will not be moving refrigerators. I will not be digging ditches for septic tanks. Turns out half of that stuff became your reality in 2 years. And I was like, see, I'm not dealing with the renter. There's no way. It was a job. Okay. So how I've been involved in passive income, and you have as well, of course, in real estate, is lending, peer-to-peer lending. So we'll get to that a little bit later, but what we've done is we've lent on the property. So we've lent on a real estate asset, and someone else takes care of the active work, or someone else pays the rent. And there we have the ability to be involved. Another thing that a lot of people have done is closing, transaction lending, that type of stuff. So if you're a part of a lending deal that has to close at the closing table and then you get paid, that might be a very fast way to make money as well. So I really like that. Haven't been super involved with that quite yet, but we are looking to partner with some new guys. So stay tuned, ladies and gents, or if you're listening to this in a binge situation, summer of 2025, you might have already heard us talk about the Private Money Club, where there's a lot of real estate investments and transactions and passive income opportunities for you.
Yeah. Why don't we jump into peer-to-peer lending next?
Let's do it. Peer-to-peer lending. Now, in the save and spend system, when we're going to talk about utilizing infinite banking concept, what we're going to often introduce to you for the first time is the ability to actually become the bank for family members and friends. Ladies and gents, that is peer-to-peer lending.
It is. So the general idea here is very, very similar to what Jeremiah just mentioned, is you're going to lend money to individuals, or small businesses, friends, family members, even people you don't know, and you're going to then receive or earn the interest payments back. A lot of times principal and interest only, principal at the end, balloon payments, things like that. And that really can provide some significant passive income for you, just depending on the terms and conditions, right? The parameters around the peer-to-peer lending situation. So the only thing that I would caution in this space is that you have to be cautious, because you don't just want to lend that money to anyone, and you don't also want to lend without the proper paperwork, without the proper guidance in place. So I remember there was one time where we had someone reach out to us interested in a peer-to-peer lend. So they were asking us to give them some money so they could start a podcast. Do you remember this?
I do.
And I thought to myself, podcasts are free. You can, what do you need money for? That's my first thought.
Okay,
then we had a meeting with this person.
I didn't show up to the meeting.
Oh, I showed up to the meeting.
Yeah.
And they outlined what they were going to do. Had a great plan in place to start this podcast, but then at the very end actually said the money was actually so they could pay off some personal debts. So that way that would free up the income they needed to start the podcast or whatever. So they were actually not asking for money to start the podcast, although that's what they presented to us originally to get the meeting. They asked for money to pay off the personal debts. And we don't generally loan peer-to-peer lending money to pay off personal debts, or at least at that time we did not. So we did not end up moving forward with that deal, but I remember that one vividly.
If I'm thinking of the same one, because we've been approached several times, and I didn't show up to that meeting, and I maybe didn't show up to several. I remember questioning you and our other partner after the meeting when you guys presented to me, hey, we kind of have to vote. We need a majority to think this is a good idea out of the three of us, whether or not we should be involved, that I was like, guys, this is not a good idea at all. Like, why are you even presenting it to me? And God bless the person out there who's following their dreams.
Yep.
But we're gonna need to lend against something that has
collateral. Right.
You know,
So for
not an idea.
that
the idea
particular
wasn't the collateral
idea for us was just a big. The price was wrong on that one.
The price was wrong.
The price was wrong on that one. And so that's what we actually want to talk about with peer-to-peer lending. Generally, you're going to want to loan on something that's got a little bit of collateral tied to it or a lot of collateral tied to it because you don't want to be out of the money, right? In a peer-to-peer lending situation, if the other person does not end up paying you back, you've got to go through litigation, small claims court, all this stuff that takes time and energy away from your main goals or your active income working career that you're doing. And so what you want to do is make sure that, like I mentioned previously, that you've got the proper paperwork set up. So one of the things that we did, because peer-to-peer lending is a space that we wanted to be in, and one of the things that we did is we went downtown, actually, downtown in our town to the lawyer's office. Mm-hmm. We brought some paperwork that we had been given or found online and said, hey, would you be able to edit, craft paperwork for us because we want to be in a peer-to-peer lending situation. And so they did that for us, cost a few $100s, not a bunch at all. But now we've got these codified works in our state legal documents that say, hey, if someone comes and asks you for money for this thing, use this paperwork because this paperwork will hold up in a court of law, mm-hmm. and it's legal and it's good, and this is how you're going to make sure you get your money back, or at least you become whole if they don't pay you back.
There you go.
And so that's a really important piece of peer-to-peer lending.
Now, I want to say that yesterday when I was doing a coaching session with a couple who we've been working with for a couple of months, that they asked when I said, hey, when you're thinking about peer-to-peer lending, you should start with your own family. There's a lot of interest leaving your family and headed over to the Bank of Travelers Rest. That's a local bank in our community. And they said, well, how do you know who to give it to? How do you know who's going to pay it back? And I said, number one, it's whoever's read this book. That's actually criteria in my world for someone on a personal loan level. Personal loan level might have collateral like their HVAC system. Look forward to me having a new video on that very soon because I lent it to someone who's one of our coaches. But they read this book. They practice infinite banking for themselves or have a whole life insurance policy that they leverage and borrow against for some financing needs. That's a person who understands the game.
Yep.
So they are going to need money just as much as I'm going to need money. But if I have money that they don't have, I'll lend to them because they understand the principles of becoming a good banker, becoming an honest banker, and paying back loans. Everybody knows, family members and friends, that they should not loan money to. So let that be a word of caution to you. Pay attention to what, why, and how, but become a good banker and charge interest and expect those payments back.
Yeah. Let's jump into our fourth passive income idea of the episode, and that is to create digital products. Now, this is going viral because there are a significant amount of coaches, teachers, pastors, fitness professionals out there that are now developing and selling digital products. So I'm talking ebooks and online courses and printables that they're selling on their platforms in order to make income. I think this is going viral because of the social media world that we live in. These people can amass and assume 1 million to 50 million followers because they are funny at telling jokes or they make really cool videos. And then but that doesn't help them monetize anything. Now, some of the platforms have said, well, if you get this amount of views, we'll pay you. Or if you get this amount of views, we'll let you put ads or we'll put ads, and therefore you can get paid. But a lot of times for the average content creator out there, they're going, well, that's not driving any sort of passive residual income to my bank account. So what can I do now that I've got this mass following, 1 million people, 10 million people, in order to create a passive residual income, and they have moved toward creating digital products?
I think it's a great idea. We've sold digital products before several times. I am a speaker, and I've had digital packages that I've sold as well. And this is an opportunity to scale because you cannot coach everyone at the same time, and I cannot be everywhere one time. So a digital product or course is really cool. There's also a lot of AI tools, more and more of which we're using all the time in our business, that can help you produce that digital product. Behind that paywall, something that other people can take from you in your expertise zone, your unique ability zone, that they can utilize or learn from. I love that. And Mom, if you're listening to this podcast and this episode, I've been trying to get that to happen for her for a while, because she is a speech coach and she needs to be in that game.
Digital products. So that one's taken a lot of love. There was even what was the masterclass phase? You remember that? Was that just a company making masterclasses?
I think that's a company. Okay, but they did a lot of promotion and marketing.
A lot of promotion, and they got some high profile people.
Very high profile people, and they were very good.
Yeah, and then all of a sudden, your favorite basketball stars teaching a masterclass on shooting, and it was like, what? And for $100, you can take 6 classes or 10 classes an hour long and have a Zoom at the end with this professional.
Love it.
And it was like, it was very cool. So anyway, creating digital products. So if that's you, maybe utilize some platforms like Etsy, set up a personal website, a personal blog in order to sell your products. There's a lot of learning management systems out there if you want to do courses or classes. And there's a bunch of different platforms like Shopify if you want to make hats and sell hats, whatever it is. There's a lot of different ways to create personal digital products out there. So
now here's another one, number 5, high yield savings accounts or CDs. I actually really like these, even though we don't talk about them very much.
Sure.
Okay. This is a great way to have guarantees. We talk about that in the Save and Spend system all the time. And high yield savings accounts and CDs are not going for big, large returns.
Yep.
But I like passive. I kind of know what I'm good at doing for active. So I would like to never lose and have passive residual opportunities. High yield savings accounts and CDs really do this really well, in my opinion. So you might go for something like 3, 4, 5, 6, 7%, depending on where you're looking and where you're going to find something in a savings account like this or a CD. But I've held CDs before. Have you held CDs?
Never have I ever.
Oh, yeah. I've held CDs before, and there's online banks that might give you, back in the day, I was getting 5 and 6%. And you could hold these things for maybe 6 months at the time. I don't know, 12 months, 2 years.
True.
And
you're not probably going to get that percentage without putting that money in for.
I think you can get it now. Let us know in the comments. Are you utilizing high yield savings accounts or CDs right now? And what type of time frame? We're Googling it right as we speak. And we're seeing numbers like 4.5 right now for what's the time?
It says
couple years, okay.
Couple years, right?
2 to 5.
2 to 5. A lot of them go up to 5. It just looks like just at different banks or credit unions in your area. So I actually do like CDs a lot more than I like high yield savings accounts.
Okay.
High yield savings accounts, the money's too accessible. So we want to create passive income. And if the money's accessible, we talked about this in a previous episode. If the money's accessible, people access it. And then it's not doing what you want, right?
Yeah.
So I like CDs for this idea of passive income. Let me be clear, because CDs are going to make you lock it. And they're going to say, if you come back early, we're going to take some of it.
Sure.
And so I like that idea if you're trying to generate passive income. The problem, of course, again, is I need to find the proper bank. I need to then put in a significant amount of money if I want to see a big return, right? Again, if you're going to get 4%, 3%, but you're only going to put in $1,000, this is not generating passive income here. You're generating passive change.
Yes, correct.
Right.
There's a difference between the income I was talking about earlier and kind of the money, because I think about the money as stuff I can spend.
Yeah.
But I do like them because I like passive and I don't like to lose.
Yep.
So you're going to be able to get this sometimes in bonds and treasury bonds, things like that as well. So.
Yeah. There's a big market correction happening currently.
Boy, oh boy.
And
it's the second week of April as we record this right now. So if you've got money in the market, you know.
Yeah, and they said that Treasury bonds, T-bills, the sale of them goes up like 60% anytime there's a market correction. So that speaks to the high yield savings accounts and the CDs that we're talking about now. As soon as people start losing money in investments, they get out of the investments and go to savings vehicles. Which I think you should have been in the savings vehicles from the start. And the math also says that if you're losing money in the investment, you don't actually pull out while you're losing money.
It's a tough road because when is it high enough?
Yep.
When is it low enough? If it's
tough.
too high, you don't want to get out because it's going well. If it's too low, you don't want to get out because you know you're about to lock in the loss. So it's a catch-22 for many of you. We'd love to know if you are moving money right now because of the losses you might be taking wherever you've got your money.
Okay, number 6, affiliate marketing. This one's taken some
love this one too. Love this one too.
Also, and I think a lot of the love for affiliate marketing again comes from the social media platforms that we generate, because these other agencies or companies will say, "Hey, you've got 100,000 people who pay attention to your videos. I'll give you, 5% of all sales of these shoes. Would you wear a pair?" So the company's going to give you $100 pair of shoes. You're going to wear them in your videos. 100,000 people are going to watch you wear these over the next, week or months or whatever. And then you're going to be able to use my coupon code, right? Use my discount code, type in Jonah123 when you go check out. And that person's going to get a kickback from that agency for being able to do that. So I like affiliate marketing also. You just see it more and more and more on the social media platforms with the people who have the big followings.
I love it. I haven't been a part of a lot of successful runs at it myself, but I've been asked to be a part of it. And I know many people who have been successful and they found a product or a suite of products or some sort of, like you said, agency or manufacturer that allows them to have that code. And that can be really great if you utilize social media or you have a following in a specific niche somewhere. You're an influencer. Go for it. Love it.
Yeah. What about number 7, Jeremiah?
All right. Renting out assets. This one is also cool. I guess I've just dabbled in so many of these and looked online for opportunities. Renting out assets. So you can generate the income by renting out things that you might own or control. And it's all the other things we haven't mentioned, like a storage unit.
Yeah.
Like a room in your house.
There's a few popular rent-out asset categories, which are Airbnb.
Oh, yeah.
Or VRBO or Turo. Those are the super popular ones. Rent your house, rent your spare room, rent your vacation property, rent your car.
I know some people locally who also do party rentals.
Okay.
And so they've got tables and chairs and tablecloths and things like that. So if I'm having a wedding or I'm having a corporate gathering, I'm not trying to buy all that stuff.
Right.
One time. I'd rather rent it, and that can be a very lucrative business because certain things.
A chair.
Yeah. Yep. Well, I mean, certain things out there like your AV equipment. Well, I'm not going to buy $10,000 of AV equipment for a 4-hour party.
Yep.
But someone can rent it. So for me, I win by having someone else set it up and tear it down and have it and bring it and know how to use it. And I'd be willing to pay a fifth of that, $2,000. Now, if I own the equipment and I bought it for $10,000.
Yep.
And I can make $2,000 a day, a weekend, very lucrative. So some of you are already understanding this, but there are all sorts of crazy things. Heaters, heat lamps, because you're going to have an outside party and there's going to be bugs or it's going to be cold.
I know a couple people who do the inflatables, the big inflatables for the kids, because they're not actually that expensive. Have you looked at the price of these inflatables?
No.
They're like $2,500 for the big thing with the slide and the rock climbing on the back.
Love them.
And then
there was one in the neighborhood 2 weeks ago.
Yeah, but
like for a birthday party.
But then you're going to pay, I'm paying $250 for that for the birthday party.
Because I don't want to pay $2,500. And what am I going to do after? Where do I put this thing
how do
after
I
I've got it?
Deflate and where do I store this thing? Right. So renting out assets is a big one. A lot of people get into the space with this. I think for any of these, right, we're at our 7th option for passive income here. But I think for any of these, the key to actual passive income instead of passive change is to pick the one that fits you the best and go all in.
100%. We've rented out, speaking of it, we've rented out the studio.
We have.
Yeah, because who's going to actually do all this setup? And you say, hey, it's not super passive. We kind of have to be here, but it's an ability to make $100 or $200 here and there because we're here and I can pop it on for you and upload your video content or your podcast audio content somewhere and kind of be done with it.
There you go.
Love it. Okay, and then the last one, kind of what we're doing right here, is create your own blog or YouTube channel. Some of you are experts, and in the world of niche marketing, we've got fractures everywhere. Do what you do well. Write it down, take a picture of it. Get it out there to somebody else. Utilize social media for the masses. There are people who love what you do or would be interested in watching it, ASMR. And so you could just put it on your YouTube channel. Write a blog. Not a recipe blog, though. We're sick of those.
Yeah, it's too many ads. My goodness. I'm just trying to see the ingredient list.
Right.
Anyway, but I agree. Blogs or YouTube channels are a big deal. A lot of the platforms that you put your blogs or YouTube channels on or channels on give you some sort of kickback, or if you get this many people watching, following, reading, that sort of thing. And so you can really create a big passive income stream by going all in there and building a following, which I think is really, really cool. So those are our ideas for passive income. Of course, we recommend that once you have passive income, that you put it in a place that is safe, secure, that you can keep it. And we talk about that on so many of our episodes. I'm sure you've heard us talk about it on an episode previous to this, or you're going to hear it on an episode coming up. And of course, the place where we put that is the infinite banking concept. That's where we keep the money that we earn, whether it's actively or passively, so that way we can save it and spend it at the same time. We've got a really helpful video, if that did not make any sense to you, at the Save and Spend System.com, saveandspendsystem.com. You can find that video by clicking the link in the description of this podcast, whether you're watching on YouTube or listening on your favorite podcast app.
Shout out to our fan follow of the week. We always go to YouTube for this, and this week is no different. The Millennial Money Mom. We see you out there, and this seems very interesting. Now that we've pulled it up, I'm like, I think I might have to go check out some of her vids.
Yeah, she's got a video
see what's going
called Budgeting 101, Zero-Based Budgeting. We just did a podcast on that.
Love it.
On budgeting. And so we should go over there and
I'm
check
going to have to chat with her.
We're appreciating that she has followed us. Maybe she's done something. Maybe we've done something that really spoke to her recently, and that's why she followed. But we appreciate you, and we see you out there. Thanks for the subscribe. Hopefully she hit the notification bell. The notification bell is how you're going to be pinged every time we put out a brand new video, which is about twice or 3 times a week on our YouTube channel, where we put out some new content. I got a DM, a private message the other day from someone who said, man, your video on split dollar life insurance was really helpful to me. Thank you.
Cool.
And that's all it said.
All right. Well, we got a lot we got more for you.
Yep.
Wherever that is.
And there you have it. It's a bunch of ideas to take your wealth to the next level, to get your passive income ideas started. So remember, building these streams takes some upfront effort. Absolutely. But long-term rewards and financial flexibility and growth are absolutely worth it. We also, of course, touched on where we like to store and keep our wealth inside of our infinite banking policies, which can be a super powerful tool. So particularly when it comes to the passive income generation through multifamily estates and things like that. It's all about creating your own financial ecosystem and leveraging your assets in smart, strategic ways. So as always, we want to hear from you. Whatever passive income strategies you're exploring, let us know. Leave a comment. Reach out to us. What questions do you have? Hit us up on any of those favorite podcast listening apps or on YouTube, where we can see your comment and get back to you. Thanks so much for your time. Thanks for listening.
You are now tuned to the banking bros. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.
Ladies and gentlemen, we want to know about your passive income strategies and ideas. What in the world have you been doing that we did not mention? We'd love for you to let us know what we can be involved in. Sooner or later, when we grow up around here, the banking bros are going to have what we have seen work so well from our friends at Wealth Without Wall Street, and that's the Passive Income Report, where we actually tell you and get specific about what we've been doing to generate passive income. Because actively, we'll do the videos and the podcast for you. Passively, we want our money to work harder than we can. So why don't we share that in our community? If you are interested in having these ideas tossed around in an environment where it's safe to have failures and successes, you're going to want to join our Facebook group. We've got one called Infinite Bankers. And in there, we're going to be talking more and more about these strategies. We post videos in there. We have conversations about what would you do in this scenario. We help people understand the beginnings of getting started with the foundational product of whole life insurance for infinite banking concept, movement of those dollars. And we'd love to see you there.